Daily Fiscal Pulse for the 13th of July, 2026. We're looking at Monday's data. Everything you're about to hear is final, so take that at face value as we move through these numbers. Let's start with what's capturing market attention right now. The AI and technology space is dominating conversation. You're seeing headlines like the AI boom just found two new winners. Goldman Sachs and JP Morgan Chase drive a lot of the narrative, and that's clearly showing up in how things are trading. But narratives can turn quickly. The real money usually tells a different story. The fiscal ledger ran in reverse. Net transfers came in at negative $13.3 billion, with tax receipts responsible for most of that pull. That represents $26.3 billion in cash getting removed from the broader system. The S&P 500 futures are painting a different picture. ES closed at 7,563, which keeps it comfortably above the 20-day moving average sitting at 7,520. That 20-day range stretches roughly 267 points wide. Despite this fiscal headwind, price is holding its ground. Zoom out and you can see the momentum in spending more clearly. Government spending over the last 5 days is averaging $10.6 billion daily. Extend that to 20 days and the number drops to $7.8 billion. That gap suggests more cash flowing through to consumers and into financial markets. Looking at the year-to-date picture confirms it. Fiscal spending from the start of the year through now sits at $1,265.7 billion, running about 4% behind where we were 12 months ago. That's a material step down in fiscal support hitting the market. On positioning, the fiscal backdrop isn't tilting the scales one way or the other. The conditions gauge is reading +2. History does offer some perspective here though. We've encountered similar setups many times, and even with tighter liquidity conditions, the S&P has averaged around +0.8% in the month that follows. Liquidity and market direction aren't locked together the way people sometimes think. Equities can push higher regardless. What does stand out is how leveraged funds have kept adding to their long positions while margin debt has climbed into the 100th percentile. That's significant. Historically, when margin sits at those levels, it tends to function more as a caution signal. One detail worth flagging: we've just seen 3 straight days of declining fiscal transfers. Markets typically feel the effects of that kind of deterioration with a small delay attached. A couple of catalysts could reshape this setup. The Social Security payment cycle hits on the 15th of July, which falls on the third Wednesday, and that usually moves flows in a short-term way. The next meaningful Treasury coupon interest payment window lands around the 15th of August. The fiscal momentum isn't pointing clearly in either direction at this moment. How the scheduled flows play out next will be what determines whether that changes. That's what sets up the session ahead.